Welcome back. Well, as promised, let's get a conversation going with Metropolis. Remember, COVID cases in India are on the rise once again, with around 10,000 active cases, as per the Health Ministry data. The centre has asked states to ensure preparedness for the management of the virus, where states have been also directed to focus on testing with RT-PCR tests as well. To understand whether there has been a pickup in testing so far, we're joined by Ameera Shah, Promoter and Managing Director at Metropolis. Hi, Meera. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, let's straight away understand the trends in COVID testing. Have you seen an uptick? And will revenues coming in from COVID testing be higher than what we saw in the previous quarter? It was only around 8 crores odd. I'm hoping not, but you give us an update.
No, so while we are hearing obviously about COVID increasing, frankly, I think consumer behavior last year changed where people actually started using far more rapid kits rather than doing PCR. One is the fear of any government reaction if they do a PCR test, which is not true anymore. But of course, second is people just want to do a rapid test at home. So we are not actually seeing PCR cases increasing across the industry at this point of time. I think also there's one other consumer change, which is that I think people got so tired of testing and all of that, during COVID, that I think people are just living with their diseases now, which is a bit scary. You see, most people we know have got some sort of a cough, cold, fever, and that cough continues for 2 weeks, 3 weeks at a stretch, and most people don't go to a doctor or don't go and actually get themselves tested. This is confounded by the fact we also have H3N2 in the system. We also have COVID on the rise. There's also viral fevers and then obviously bacterial infections. And the symptoms for most are the same. And that's why it's important for people to understand actually what is causing them the challenge so they're able to treat it accordingly.
Okay. In fact, Ameera, good morning. I can tell you from personal experience, I just recovered from COVID last week. And it was a similar case. I mean, I tested at home, it tested positive. I didn't feel the need to get an RT-PCR because by the time I thought of that, my symptoms had already subsided. So I take your point, maybe the strain itself is weaker. We can hope for that. But can you give us some numbers, for COVID testing itself, just testing in general, how has it been so far this quarter in terms of growth? And what is the expectation as we go into FY24 for the company itself? What kind of realistic growth are you looking at?
So honestly, COVID testing this quarter is not going to look anything different than most quarters. I think it's a marginally increased, so really nothing to talk about. I think we won't see COVID revenues really play any sort of an important role in the revenues for the diagnostics industry. It'll be as it is every quarter, one of the many tests. I think in terms of the industry, I think the last year there was a lot of negative perception around new competition coming in, a lot of so-called disruption happening, pricing pressure, and a lot of worry around, how this is going to play out into the future. And actually what we are seeing on the ground is slightly more nuanced than what the general perception is. On the illness side, which is the area that Metropolis really operates in, and the acute illness side where people get really sick and need advanced diagnostics, we actually have not seen a change in either volume or a change in consumer behavior or a pricing pressure in any significant way. It is on the wellness side, which is a new category getting created during COVID, where you've seen a bunch of the new health tech companies that have come in really playing with price as a way to enter the market. And instead of, sort of quality and service being at the center of it. So I think on the wellness side, there is certainly pricing competition, but on the illness side, we continue to see quality and service actually be the most important thing. Because, we have to understand doctors are very dependent on accurate diagnostics to make their decision on treatment.
So on just one follow-up here on the illness side, have you seen any pricing pressure at all? Has it affected your profitability in any way? And also trying to understand whether you will be taking up the rates in specialized testing in the quarters to come.
Actually, if you see for the whole industry, the pricing pressure has not been there on the illness side. Again, it depends on which part of the industry you play in. If you are a chronic player, where you're mostly been doing, diabetes testing, cardiac testing, you are seeing some impact on pricing pressure. If you're an acute player like us, we are not really seeing the pricing pressure from a MRP or a customer price basis. I think where there is a certain amount of pricing pressure is more in the margins for the intermediaries in the industry, which is where the competition has actually heated up. Your franchise centers, the discounts that have to go to hospitals when you're doing a B2B kind of business. So I think that intermediate margin is where you're seeing a little bit more of the pricing pressure. But that also is more, linked to the semi-specialized tests, which are about 20, 30, 40 in nature, which tend to be more competitive. And new entrants are trying to play on price in those particular tests. We are not seeing margins impacted by pricing pressure or by competition. If you see pre-COVID, we were at about 26 to 27% margin, EBITDA margin. We are currently at 25.5. The difference of 1.5% is actually not because of pricing pressure, but because we have gone on a large lab expansion spree and added almost 40 labs in the last 2 years, obviously, which will dilute the margin in the short term as they grow to maturity and then start becoming profitable.
Ameera, hi, good morning. The stock price was almost 3,600 rupees in December of 21, and now at about 1,200. Now, of course, when you run the business, not the market, and of course, markets in their own ways, overpricing and then underpricing things. But if you had to send out a message to investors watching this program, what would it be? Would margins be around this 25% level where they were in the third quarter of 23? Is there scope for improvement? What should we watch out for?
Actually, markets, as you know, tend to move as a pendulum. At the peak price of 3,400, it was on the peak of COVID, where COVID revenues were pumping in, profits were coming in, and obviously all other industries were not doing well. So a lot of money came into diagnostics because it was considered sort of the sunrise time at that point, which honestly I think was non-sustainable prices because we all knew it was one-off based on COVID. I think post-COVID has gone. Obviously, the COVID revenues and profits have eroded for the whole industry. And we've all waited for non-COVID to come back to normalcy, which it has. But still, consumer behavior hasn't come back to complete normalcy as it was pre-COVID. So it's a matter of a transition. And I think we are now in that transition. The message to investors really is to look at sort of the business pre-COVID. And you saw that we were all growing, the industry, the top players were growing at maybe mid-teens growth with a similar kind of a profitability. And we are actually at the same place today. So rather than having sentiment driving it only in terms of going up because of COVID and then drastically falling because COVID has come down, I think if we look at the fundamentals of the business, they're as strong as they were in pre-COVID.
All right, Ameera, very quickly before we let you go, any further inorganic growth are you looking at? Point number one. And point number two, wellness and specialized testing. I think that's around 13% of your mix in the coming year. What is that number headed to?
So wellness, you're right, is about 13%. That will grow by a few percentage points this next year. Our specialty mix is almost about 42%, which is probably the highest in the industry, which is what is related to the acute testing that we do. And that will also keep moving up. And this is how we keep moving up the value chain and very different from everybody else. As far as the question around inorganic, I think there is a divorced reality between the public markets and the private markets still. I think private players will not come to some reality on the valuation. So I don't see very likely too many deals happening this year unless we see private markets adjust to the new realities of the public.
Of the public market. All right. Thanks very much, Ameera. Great to have you with us here, and I hope we speak more often. This is an interaction after some time. Thanks very much for your time. Good luck. Good